some of the highlights that I've seen. I'm going to quickly respond to. First, marked in a review task where I provide both correct things and incorrect things. No, we don't negatively mark or negatively assess. I guess time will not be on your side, so you won't finish the assessment, because if you're going to write review comments for things that we've done correctly, then you're not going to get coverage quicker. So your response will have to be longer, and then you will not finish the assessment. So focus on the incorrect things and things that have been omitted, or unreasonable things, or inaccurate things, etc. The second question I wanted to address was around the fourth. You know, when I say reasons why, that is depth. Okay. One particular question, I can't remember, was it from Flora? No, I can't remember who it was from, but was asking on the reasons why. Can I just put a quote to the standard or legislation and say, as required by the standard? No, that's not enough. We call that dumping. What you've got to do, you've got to, what's the word? Interrogate or conflict the standard. So if the standard requires a particular thing, you've got to apply. Yes, the word I wanted is apply. To demonstrate why the particular element of the standard that you're quoting, if you need to quote it, why it's applicable in that case, or why it's not applicable. So don't just say this expense will not be deductible because it is not in production of income. Why? Why is it not in production of income? Because it not in production of income is the right thing that you're quoting out of the legislation. But why is it not in production of income? Well, it's not in production of income because what it is producing, it's an exempt dividend income. An exempt dividend income is not income as defined, so it's not in production of income. I know I'm using too many words, but I'm just trying to illustrate to you that when you are just being too simplistic by just cutting the relevant elements of the standard or legislation without really applying them sufficiently, we are left with the so what, or a further why question. So for you to demonstrate depth, you've got to unpack exactly why that relevant part of the standard is applicable or not applicable. Okay. Right. Guys, let's do the review. There is a little task that we see. It is fitting in one screen. Review the financial projections that I've prepared and provide any key strategic issues that the board should consider in evaluating the feasibility of the proposed George OR Tambo route. What's the context? Let's read the blue. Good morning, actually should say good evening. On Time's plans to enter a wet lease for 18-month term is with Journey Ops, a well-known wet lease specialist that provides services to airlines. This aircraft will be used on the new route between the OR Tambo George. Journey Ops will provide daily flights between OR Tambo and George airports at monthly cost of 13.8 million, including VAT, per month during 18 months lease. I've prepared some high-level financial projections in the table above for an initial 12-month period for the new George OR Tambo flight route. Based on my assessment, the additional flight route would be quite profitable for on time, and I'm excited by the opportunity. Is it true? Earnings before interest, tax, depreciation, amortization, 80 million a year. Wow, I can see why the CFO, Sigal, is quite excited about this opportunity. It is definitely profitable. All right, so you are tasked with reviewing the financial projections, number one. Number two, providing key strategic issues that they should be considered. Okay, right. Two components to the task. You respond as an email and you immediately write, I guess, hi, Sigal. I have provided a list of the review notes as number one, and secondly, a list of key strategic issues that the board should consider. Let me know if you require any further discussion on these elements, etc. But importantly, do not forget one component of the task. Okay, so you've got to give me the two headings so that I know here is the list of review notes, and here you need to write those headings up front so that you do not forget one component. Just remind me, or let me remind the first timers, if you miss one component, let's say you give us a list of review comments, but you do not give us a list of the key strategic issues that the board should consider, or you give us the list of key strategic issues, but you don't give us the list of review notes, what happens is that when we evaluate your competence, it will automatically be limited competent, okay? So it's really, really important that you address both components of the task. Flora, what are the review components, the topics? Maybe just unpack that on not camera, on mic. Flora, what do you mean? What are the review components? Oh, you mean it's a section. I'm just saying because they've asked you to do two things, it means it's two components or two sections. So I want to see a section with your review notes addressing that first. Call it, in the old days, we'll call it the first required. And then you'll have another section dealing with the second required. That we call them components of the task. Am I clear, Flora? Or you want to just come on the mic? Flora? Flora, just type in the chat box if I've answered your question or if you are clear. Prince, you can go ahead.
Hi, I'm not sure if you managed to answer my question, but when it comes to a review question, you gave us like a structured answer.
Sorry, Prince, I'm losing you now. Prince, I've lost you. Okay, Prince will come back. Rhonda?
I think his question was that he said that you gave review points and he wanted to know what it is because that was one of his questions in the chat box.
Sorry, Rhonda, just repeat that. What was his question in the chat box?
He asked for when you mentioned the review points, like mentioned the incorrect points, that 4 steps. Somebody asked a question and I don't think it was answered. And I think he's that person that asked the question. So maybe he'd want you to repeat the steps.
Oh, okay. So the steps, the four steps, Prince, are when you raise a review note, you've got to tell us what you are picking up that is incorrect or inappropriate or unreasonable or inaccurate. So tell us what the issue is and be clear that this is an issue. Don't be too, what I found previously with some candidates, they're very polite, and when you read it, it doesn't sound like it's an issue. Maybe they will just say, maybe someone, let's go to the tax rate one. I saw review notes saying a tax rate of 27% should have been used. That is not a review note. Because you can't just say should have been used. What is the context of that? The reason you are saying that is because of the first part that is missing, of saying it is incorrect to have used 27%. You've got to really attack or be specific about why you're going to say what you are saying. Okay, so you can't just start by in the middle and say, oh, a tax rate of 27% should have been used. Okay, you've got to start by saying it is incorrect or it is inappropriate to have used a 28% tax rate. That was the rate, because that was the rate that was applicable years ago. Now you should have used a 27% tax rate. And then why? Because that's the rate that has been enacted and is applicable for years of assessment commencing from this date to that, from this date, which is the current year of assessment of on time. You've got to apply why that law is applicable to on time at this point in time. Thanks, Rhonda. Rhonda, if that's what Prince was asking. Karabo? Karabo?
Yes, good evening. Thank
Good
you.
evening.
One thing that I just noticed, I'm not sure, stand to be corrected, is the financial year, the period that we are doing our projection. It doesn't seem to be reasonable to just conclude that this thing is going to be
are you now,
profitable.
Karabo? Are you already in the review comments?
Yes.
Okay. Yeah. Okay. I'll give you time to get started on the actual work. I wanted to just sit back and talk about the structure. That, do you agree, Karabo? We're going to have two sections of our response. One section is going to deal with the review comments, and one section is going to deal with strategic issues that the board should have considered. You agree with that?
Yes, I do agree with that.
Yes. Then just hold that thought, because I'm not yet in the review. Because I want everyone, especially my first timers, to know how important it is to structure your response so that you don't forget any part of the task. Okay.
Okay.
Thanks, Karabo. Ayanda? Ayanda, I think I can't hear you. And then who's next? Is it Peniel? I'm not sure if I'm pronouncing your name right.
Yeah, it's correct.
Okay.
Okay, so maybe on the review element, right? With wording, it is inappropriate or it is incorrect. I think for us the challenge was that there's a lot of emphasis placed on, maybe you're reviewing the CFO and you're junior to the CFO, so you're trying to find the language that doesn't, I don't know, that shows you to respect the position and all that. So maybe you can just guide us on that.
I like that, Peniel. Don't go off mute. Do you think it is inappropriate? It's harsh?
Oh, no, I wouldn't necessarily say that, no.
Oh, then that's fine. Because I'm just trying to figure out if a word is really bothering you, it may sound disrespectful. Of course, don't use that word. But when something is wrong, we call it wrong, right?
Yeah.
Yes, you're not in doubt about whether it's correct or not correct. You know very well it's incorrect. So you're not lying. You're not offensive. I guess you can't use the word, it's ridiculous that you've used 27%. That will sound a bit unprofessional. But if you say it's incorrect or you say it's inappropriate or yeah, those are formal words. Thanks, Penel.
Right. Thank you, Phil.
William?
Good. Even if can you hear me?
Loud and clear.
Oh, thank you. Thank you so much for the presentation. I think mine is just on the structure. If maybe perhaps you can add insight there. Because now, like, let's say on this particular task, right, I know there's two components that needs to be addressed. It's the review notes and also the strategic issues, just to provide some strategic issues there. My key issue lies on the coverage, like the appropriateness of how many review notes should I raise to be deemed competent? How many key strategic issues should I raise to be deemed competent? Because you'll find that in a task that, yeah, you're busy writing, then you're running out of time. And yeah, I think maybe that's how to balance the two, given that your structure, yes, you've got your two headings. Yeah.
Got you. Thanks, William. And you're going to raise everything. You're not going to stop yourself. Yes, time may stop you, but you're going to review on a line by line until you get to the end. And you're going to do this within 40 minutes. Okay? So that's what you need to tell yourself from the word go. That, listen, I've got, let's call it 40, 45, because we've maybe used 5 minutes to plan or 10 minutes, and we've written the structure. We've got to get through all the review comments for 40 minutes and the key strategic, meaning we mustn't walk out of here thinking, I still have a lot to say. Okay, because then we're not going to get through coverage. But let's demonstrate it. Very, very fair question. Karabo?
Can you hear me?
Loud and clear.
Excellent. I just wanted to ask now, if you say it appears that this component was not done appropriately, and if I say that this component is not done appropriately, which one is, as a marker, you see it as this person knows their work?
The very conclusive one. When you say it appears as if you're also not sure, we wouldn't mark you or assess you differently, but it's just not giving that assurance. Yes, there could be certain review notes where you need to use the words it appears as if, because you're also not sure, because you may need additional information. That will be fine. And indicate that I may need this additional information to be very conclusive. That's okay. But when they've used 28% instead of 27%, it doesn't appear. It is wrong. Do you agree?
I agree.
Thank you.
I agree.
Great. Guys, now let's get into the review comments.
Sorry.
Go for it, Karam.
For the review, mainly for us to get more points in the review, which means it demands a lot of the technical part of it, which means we need to be technically strong.
And technically strong and business context. Both. They will give you the necessary critical thinking skills. Both those. If you know the business very well, and you know the subject area, the technical area very well, technically, you will be competent.
Thank you.
Thank you, Karabo. Yeah, so let's go. So guys, I wanna, oh, sorry, Mbali, what's you've got a question as well?
Yes. So in a question like this, where in a task like this, sorry,
no
where
worries.
they didn't mention that you should consider reasonableness and the completeness of this information. So how do you go about performing reasonableness and also completeness? Okay, maybe completeness, you will compare it to your pre-research information to see if they missed something, but
yeah,
with the reasonableness, how do you go about doing that on the day?
So maybe let's do it, Mbali. Let's do it so that you can see how. You know what I mean? Yes. Let's get into the meat of the task now. Guys, the way you're gonna review, you start from the top. This is a George O.R. Tambo flight route, 12 months ending December 2024. All right. I think it was Karabo. From there, Karabo already, I can't remember, was it Karabo or someone else, already had a review note. And I just stopped them. I said, I was still unpacking the task. But now, if we go into the task, Karabo was not happy with the fact that they're doing a 12-month analysis. That's a review note right there. And was telling us how inappropriate it is. And I think Karabo will probably have reasons, and I think he shared some of them, to say, well, I mean, the reason it's inappropriate may be because this is an 18 months, so 12 months of the 18 months is not a full completed period, or 12 months take a short-term view as a profit analysis, whereas we need a more longer-term view, because what happens after this 12 months or 18 months? Are we going to renew this wet leases? So maybe something like an NPV analysis may be appropriate as an approach to analyze this. I think that's what Karabo wanted to say. Do you see how the level of the depth in discussing that? And this one can sit either as a review comment or can sit as an additional consideration or any key strategic issues. Because as to whether you pick it as a review or as a key consideration is okay. All right. So I wanted to just show that as you look at each line, you've got to be critical of every line. So I've given you that example, or Karabo has given us that line. Let's move on to the next line. Total number of available seats. Are you guys comfortable with the total number of available seats? Or do you have a review comment? Put the review comments in the chat box or raise your hand if you do. Yes. Gift, why are we happy with no review comment? Because this 255.60 is exactly what was sitting as part of our analysis when we did the calculations in the PRI. Where were we? This will amount to 250,560. So you need to sense check that and say, is it exactly what I also came up with? No review note. So you're not going to sit and write a review note. Well done, you've correctly determined the total number of available seats because those number of seats are this multiplied by that, which you got right. Okay? If you do write that, you're not going to get credited for it, meaning you're not demonstrating any level of competence. Because we don't raise review notes on good things, on things that have been done well. Okay. Flora is asking, did we not say 701,568? So the 701,568, Flora, was the actual number of passengers that flew with on time during the year 2023. Do you get me? So then, yeah. Then in terms of the 255.60, that's the available seats on one aircraft, or is it two? Well, let's just say the 1,440 flights, okay, that will be going to George. Okay, so can you see the calculation from Gift? Each flight will have 174 potential passengers. No, not times 4. Why are you guys? Oh, yes, times 4 because it's times 2, being 2 trips a day and 2 returns. So it's times 4 and then multiply by 360 days. So that's how we get 250,560. Are you happy, Flora? Kim, I hear you, but I'm not sure I understand where the bat is coming from. Do you want to unpack? Oh, sorry, Flora. Flora still doesn't get it. I'm going to come back to you, Kim. So, Flora, let's go back to the pre-release. They said they're going to fly 2 flights a day to George. Do you agree? Maybe just open your mic if you can. And then they will be returned. So they go twice to George and they come back. So it's 4 flights. And then for 360 days, that's how you get 1440. Okay. And then each of them, of those 140 flights, will occupy or will transport 174 passengers. So 1440 times 174, that's how we get 255.60. Do you get it, Flora? Okay, sounds like it. Cool. Kim, you had another strategic consideration, which I'm happy to take it as an additional consideration, but you had a but, so I couldn't maybe understand. All right, it doesn't sound like Kim is able to chat. Do I have a hand up? It doesn't seem like I've got a hand up, but I see a hand here, but weird. Anyway, oh, the other piece that I forgot to mention when we were looking at OR Tambo flights route 12 months ending December 2024, when I was reviewing, I would also challenge that, wait, we are sitting in April. So this is projections. So how are these projections going to be 12 months? So either the projections must start, because I think the lease, they told us that the lease will commence on 1 March 2024 if it has commenced. So there is a 2 months lag as well that you needed to challenge to say, if it's going to commence on 1 March 2024, then guys, then the 12 months will not end December 2024, will potentially end February 2024. Or if we take the time we're sitting at now, it will potentially end April next year or March next year. Okay, but you've got to challenge that as well. Right, let's go to the next line. Estimated number of passengers. Oh, Kim wasn't working, but was in connection with the fact that, yes, happy that there was no review comment specifically, but that strategically there is something to consider. Absolutely, absolutely. Yes, let me just go read your strategic consideration again, Kim, just to make sure I'm aligned with you. Could be that, are we going to use the same size aircraft for, okay, which is more of a holiday? Okay, so I think, yeah, yes, you can consider that, whether it's the same flight or someone else could look at it from a demand. Let's go to the demand. Estimated number of passengers will be 200,448 passengers. Are we happy here? That's the estimated number of passengers. I see what Mzwakhe is saying in the chat box. Oh, people are not happy. Mzwakhe, do you want to come back, open your mic and tell us, are you happy or are you just making a point in the chat box there?
Good evening, Freddie and everyone.
Good evening.
My problem with the estimated number of passengers is that it suggests an 80% load factor, which is not consistent with the results we had because it was 70% when we looked at it earlier on.
But 70% of what was on our existing business. So are they supposed to be equal?
Business. It just does not seem reasonable.
Why?
In that sense. Because
Why?
on my research, on my research, I saw that an industry average of 64%, and then our existing flights are achieving 70% load factor. So now when we aim for 80%, it's a 10% increase, which for me seems unreasonable and might suggest that we run the risk of overstating revenue.
Why does it seem overstated?
I'm a bit stuck.
And you're not stuck. And you're raising a valid review comment. But you can see what I need from all of you guys. I need depth. I don't just want statement. I want, because you are comparing, which is very brilliant, which is what Mbali was asking guidance on, to say, are we going to even evaluate reasonableness? Yes, that's part of your review. When you find it unreasonable, do state and tell us why it's unreasonable. So Mzwakhe, I wanted you to just apply it a little bit. So to say, well, it is unreasonable that for a flight that's going to be in the first year, that's a new expansion, will achieve an 80% load factor. When we've got existing operations that we've advertised for years, that are still only achieving 70%, and your industry players that have been in the industry are achieving, per your research, are achieving a 60, whatever you say, and I think someone else at 89, so I don't know who's telling the truth. But you see why then it seems unreasonable, because this one is new. You've got to have an advertising, a strong kickoff. It's not going to kick off as hard as things that have been in existence. That's number one. And you see, Mzwakhe, you had all the points. You just and you were still going to be we're not going to assess you differently and say we don't get you. But I just want you to sound like you're coming from Indunamo. You sound like you come from APC, and you've got that thing that will set you apart from the rest. And in addition, 200,448 passengers, okay? You are estimating 200,448 passengers. Our AXA research says 750,000 is the available market. It is unreasonable that we expect, what percentage is this? That in our first year of operation on this route, we will take away close to 20% or just over 20% of the market share from existing airlines. It just doesn't make sense. So that's brilliant, Mzwakhe, that you've challenged that. I like that. Yes, Mbali's also, you are evaluating it. Nyasha, you've got your hand up. Yes, I like.
So I just wanted to clarify there, because we are doing the review for line 2, and we are also now looking at, from what you are saying, we're also now looking at the strategic issues, strategic considerations as well. How do I, because I have got 2 sections on my answer, now how do I bring it to the strategic considerations as well as to support this point that I'm making, to say, okay, it is unreasonable to say that the market that we are targeting, we're targeting about a third of that market in our first year of operations. I can raise it in the review note as well.
Yeah. So for me, both the comments, I raised them in the review comments, but maybe highlight to me which one is a strategic consideration, which then I need to know whether I can flag it down to the second component of the task.
The strategic that I'm thinking is the fact that we are targeting 30% of the market, the available market in our first year of operations. How reasonable is that?
It sounds like you're still challenging. You're still challenging the estimates, the projections. So
okay,
it still belongs in the top.
Running out of. Okay.
Yeah. And that's what Mbali was talking about when she said, can I evaluate reasonableness? Absolutely. Okay.
Okay.
Fantastic. Then we get to ticket revenue. Where is this ticket revenue coming from? 360 million. Gift, you sound like you're coming with an answer there.
I was still okay. For the second line, I had a different answer, but I think it relates to the third line as well, because I said a review note is that it is incorrect to not list the assumptions used in the determination of these estimates.
Is it incorrect? Or is it your preference?
Because I think it answers the question again as to where do these numbers come from?
So yeah, Gift, you know, I'm going to challenge that on the basis of, you know, like, let's say in order to say if it's not documented, it's not done.
Yes.
Do you guys have that concept in financial management that we have to, like, who came up with that law or rule that every assumption in the projections must be documented? Hey, Gift? Or is it a preference of you as the manager for me?
I think now that you're putting it that way, it would be a preference.
Ah, you see, and then now you can use the word it is incorrect. You could say, I would have preferred that you document or you outline your assumptions so that I can be able to evaluate their reasonableness.
Okay, now I understand you.
Do you get what I'm saying?
Yes.
Amazing. Cool. Yeah. So you see, hence, Bongi comes through. I wanted to do the calc.
Good evening, Ferdy.
Good evening.
So does it mean, based on what you have just said now, does it mean also on the review, we go through the 4 steps, and if possible, we'll then add a recommendation?
Yes,
which can
so
be
the third, remember the third one is sort of like a recommendation. Third one is what you should have done or what you should do to correct, which is a recommendation with its reason as number 4. You get me?
Okay, I thought probably number 4 would also include a technical basis on what should have been done and why you are saying so based on technical reasons.
Yeah, which is a recommendation, isn't it?
Oh, okay. I think I get it.
Yes. Okay.
Okay,
cool.
Thank you.
Thank you, Bongi. Then where do we go? Oh yes, we're trying to calculate. Kim, Kim, you are actually reading my mind. You're saying, what is our current ticket price on existing routes? So is this a review note, Kim, or are you asking me, or let me just understand, or are you asking your fellow colleagues? Oh, but Kim, you said your mic doesn't work. So maybe let me go to Sam. Samuel?
Hi, Freddie. Can you hear me now?
I can hear you, Kim.
No, my post in the chat was in response to one of the other members on the call where she mentioned the price of 18,000 per flight. And I agreed with her, and I wanted to compare it to the current ticket prices that we're charging on our existing routes to see and assess the reasonableness of this ticket price that we're charging on the George route.
Absolutely. And how, yes, how are you going to word that, Kim, is going to be very important, because what we're saying is 360,806,000, okay, divided by 200,448 passengers. So that gives us 1,800 as the price of the fare, okay? So then now we need to evaluate and interrogate the reasonableness of that 1,800. And absolutely, it's so important that, because remember, you might have had, in this case, I don't think I gave you an average price, but before the day, I suppose you would have checked what the flights are fare and all of them. When you did your imaginary NPV analysis before the day, you would have checked what's your P times Q. So the P, what would be the average P? And then you test this 1,800 against that. And if it's not reasonable, you'll be like, you're going to market yourself out of the competition, or you are significantly undercharging, but it could be as a result of you being the new entrant into the market, and you're trying to absorb market share. Absolutely. Okay. That's on that line. I've got two hands. I've got Samuel. You can go. Samuel?
Yes, hello.
How are you?
Yes, I'm fine. How are you?
Good, good. You've got a question.
So my issue is on so we have that point where we're saying maybe we prefer the inputs. So on that 4 stages, I didn't quite hear on the first one the issue. What would be the issue on that one? That point where we are saying we would prefer the inputs. What would be our first stage like? What would be the issue on that one?
Who was it? It was Gift. Gift was just not happy that assumptions were not provided before these projections are given. So as maybe the first slide to provide assumptions. Do you get me? So yes, I wasn't too keen of that review note, because it's more a preference issue rather than a factual. But nothing wrong. If Gift thought about it in the assessment, she must write it down and move on. And potentially it could, but she, as writing it down, you will know very well it's a preference issue rather than a factual or technical error. Okay. Happy?
Yes. Thank you.
Thank you, Samuel. Who is next again? Who? Where is my Itai? Go for it.
Freddie, just looking at the number there, the 360,806. Besides the amount looking a bit reasonable, I would say it's a bit unreasonable, because it looks like they've just used one-way return tickets. With airplanes, you got to remember they're always two-way tickets. So we would also want to know how they've actually arrived at the ticket pricing. Is it split. What's the split between return tickets and one-way tickets?
Wouldn't that already be taken into account, Itai, by us taking 2 flights down multiplied by 2 return?
Well, remember, sometimes some people travel one way.
Yeah.
They come back with another flight because it's cheaper to combine the two.
So you are challenging 2 times 2, basically.
2 times 2.
Yes. So when we are on line 2, absolutely amazing. Challenge that, is it all going to be a factor of 2 times 2, or is it 2 times 1.8 or 2 times 1.7, etc., on the basis that it does not necessarily mean it will be a return, or when someone books one way will come back, etc. Yes, happy with that. Okay, but it's more on the numbers rather than the revenue. Okay. Cool. All right. Any other? Okay, so let me see what you guys are saying in the chat box. Also, do not forget unforeseen breakdowns and stuff. I guess, yeah, well, they did allow for maintenance for 5 or 6 days, and I guess you could have questioned the reasonableness of that. Hence, drop chances that people are always looking for. Okay, are there discounts, refunds, provisions? Excuse me. Does that price include or exclude VAT? It should exclude. Rachel, I guess, would you ask that question? Does that price include or exclude VAT? It should exclude. Would you write a review note like that?
Well, Freddie, not specifically like that, but I'm just paraphrasing. It's not really a proper review note. It doesn't have all the components.
Correct.
I wouldn't write it like that, yeah.
Good, good. And so the 1,800, when you say it should exclude VAT, what do you mean? Are you meaning we should charge an amount that does not have VAT, or the projection, we should charge the amount with VAT and the projection should not include VAT?
Yes, I'm saying that it's easier to not consider tax consequences on the projection itself. Because normally we consider them separately, but the actual main tax consequences, because it just makes things more difficult. But also the reason why I'm raising it is because I saw there on the scenario that the costs, the specifically mentioned that the costs include VAT. So I guess my review note would be, if it's like that thing of keeping it similar, if everything includes VAT, then your revenue must also include that to have to sort of make it level the playing field. So that's what I guess what I was saying. Yeah.
Got you. Did you remember, Rachel, whether flying from George to OR Tambo, whether it's a 0-rated supply or whether it's a VATable supply? Do you remember those rules as well?
Yes, that's also what you need to include to ask where to just,
yeah, but like that, you wouldn't,
the text portion.
But that you'll put it as a as a key strategic consideration, right?
Yes.
Because you're not challenging a particular thing that they've done wrong here.
Yes, yes.
Okay, so
that would be a question I ask at the bottom.
And yeah, remember, I don't like questions. I like considerations as a statement to say evaluate whether this will be VATable or not VATable, etc. But I guess from OR Tambo to George, both legs are in the country, so it's a normal taxable supply at a standard rate. It's not like one leg is in a foreign land. Right, so let's go to meals and beverage revenue. Do you guys have a Are you guys happy with that? Okay, I see what the people are asking me to do. I'll do that shortly. Meals and beverage. Let's see. Itai, go for it. Itai, unmute.
Freddie, I'm not happy with the meals and beverage. I've unmuted. Hello?
No, we can hear you now.
Freddie? Hello?
We can hear you, Itai.
Oh yeah, I'm not happy with that meals and beverage. Yeah, I'm
so
not
it
happy
is
with
inappropriate to do what?
Because it's working. It's inappropriate to work out the meals and revenue. Oh, sorry, meals and beverage revenue at 90 rand per passenger, because on average these flights with what you call it, with that are like 2 hours or less. Generally, people don't eat as much food, and secondly, number two, most people get onto the airplane lounges, and then they don't need to eat on the plane. At most, you probably buy a cool drink. So we just need to check the reasonability of how they've calculated the meals and beverage revenue. Because yes, nowadays you can also buy your meals and beverage before you buy your ticket, but generally, because of the lounges, I don't foresee that happening.
Good, Itai, amazing. I like how you are substantiating why you are unhappy with the number, the rate, 90 rand per passenger. It just seems unreasonable for the reasons that you've outlined. Rachel, you seem to even question the existence of meals and beverage. Why?
Maybe I'm sorry. You correct me if I'm wrong. Maybe I am sort of mistaking the dry and the wet lease. In the wet lease is okay. So from a IFRS 16 perspective, that is a component that would normally expense, right? But from a strategic or financial management phase, is that not something that is it's for the lessor? So because then why is it our revenue then? For me, it sounds more like a cost than a revenue. Seems like I have overstated my revenue there. If that's
absolutely.
Yeah.
It is inappropriate to have the 18 million meals and beverage revenue in a wet lease because that revenue flows directly to the operator, being the lessor.
Yes, so I wouldn't include it in the analysis.
It's not your revenue.
Yes.
Okay. Fantastic. Thanks. You see, we will have two indicators. Itai will get the indicator of critiquing the reasonableness of the amount, whereas Rachel is getting an indicator for critiquing whether this belongs here in the first place. Wet lease payments. Where did they get this amount? And someone else, who is this? Flora actually also nailed it to say, if we're going to include this revenue, where are the costs for all these meals? And then it reminds me why I don't like raising review notes as questions, like what I just said, which is, if we're going to include this revenue, where are the costs? The reason we don't like you guys raising review notes as questions is because you forget to then provide the reason why you are asking the question. And then your statement or your question lacks depth. Because all what you need, if you're going to do that and ask questions, you've got to tell us why you're asking questions. Like you've got to then justify and say, oh, well, because the reason I'm asking is 1, 2, 3. Because, yeah, you can't just have questions that we don't know the context of the question. I can. Nyasha, you've got a hand up. Are you going to deal with the wet lease payments? Are you unhappy with that?
Yes, I was gonna deal with the wet lease payment.
Go for it.
So I see that it is based on 13.8 multiplied by the 12 months, which is it's actually VAT. It's including VAT. So if this is it's a taxable supply, and the VAT should not be included as part of our payments, because we can recover that. So instead, that amount should be 100 over 115 of that amount.
Amazing. Amazing. Well done, Yasha. That's exactly the issue with that wet lease payments, that the VAT is included in there when it shouldn't.
Ferdy, I mean, just on the wet lease payments, right? I think the overall format of this projection also kind distorts it, because if this projection is an income statement projection, then you obviously have to split the wet lease payments into their components, the rights of use assets and then the service items. So the service items then would be included in the income statement projection. And then obviously the repayments on the rights of use asset would go against the lease liability. So it also depends on what kind of projection they're doing here, if it's an NPV, because if they're ending it with earnings before interest, tax, depreciation, and amortization, which makes it look like an income statement, that means the wet lease projection payments need to be split.
But would that split be relevant for decision making? Unless it's going to change the number, but if it's just splitting it for presentation purposes, does it make
would impact the number. It would impact the number, because if this is an income statement projection, then your EBITDA would obviously be a lot higher, because your wet lease payment, the asset portion of the repayments would actually be going against your balance sheet.
So then that wording of earnings before interest may not necessarily be before interest, if that 165 does include interest. That's what you're saying.
If the interest is included, but then obviously the principal payment of the wet lease still needs to go against your balance sheet. So again, your wet lease payment there is incorrect.
Absolutely. And a very valid presentation issue, which it will be interesting for Rendani to come and unpack, because I agree with you from if you're going to say define the 80 million as earnings before interest, but that 165 does include interest, then because of the IFRS 16 accounting, then we're not on the same basis. And I'm happy with your reviewing it.
Yeah, if it's an NPV calculation, then I understand, then it does make sense to have it there.
Yeah, absolutely. Amazing. All right. Then we've got cost of fuel, lending, and parking. 133. Do we have a review note there? Nyasha, is that a legacy hand or is it in your hand?
That's a legacy hand, sorry.
Thank you. Karabo?
Just to be clarified, I'm not sure whether I heard properly. Are we saying that the wet lease payment is inclusive of the interest, and depending on what kind of financing, what kind of a recognition are we using? That's what's going to determine whether it's inclusive of the interest that is going to be paid on it or what. Thank you.
So basic what we are saying, Karabo, is if this wet lease is a lease as defined in IFRS 16, then presentation-wise, you'll have a depreciation and a right of use and I guess an interest element to it. Do you agree? Which is embedded in the lease. Yes, that's what we say. Then that line, earnings before interest, then it's wrongly defined.
Okay, good. Thank you.
Good. Cool. Are you guys happy with the fuel, lending, and parking fees? Yes, Melody? Go for it, Melody.
Hello, can you hear me?
I can, loud and clear.
Hello. Okay,
Yes.
so I was saying I would question the basis of how they come up with those figures for parking and fuel. What basis are they using?
Yes, absolutely. But I guess those will be additional information that you need, which is also based on what was someone did say, it was Gift saying we need your assumptions. Okay?
Okay.
Yes. Okay, guys, maybe just to wrap it up, then this is where, remember that now we're at the bottom. We finished all what we're reviewing. The most important thing of a review is always to step back and say what should have been in there and we did not put in there. What I think, was it Mbali? Mbali, you asked, it's a completeness check now. There will be things that we intentionally left out. Okay, so think about costs. Which costs, based on the PRI? Let me go back to the PRI. Which one is it? Or maybe, is it the, or based, where's the PRI? It's first trigger. Based on the PRI, guys, what else should be in there? Yes, Gift?
So I just have a question and a response. My first question is, with those landing costs and the fuel costs, isn't the whole premise of a wet lease that the lessor takes care of everything? So should these costs even be included?
I would say then, yeah. So business context. So the fuel, lending, and parking are still for the account of the lessee.
Okay. Okay. And then the review note would be, I think that it is incorrect to assess the profitability of the project merely based on the EBIT. So the NPV of the project should be determined using cash flows and appropriate discount rate being the WACC. And I think this is because it's a medium-term project.
Yeah, so that was our first review note. Correct. Yes, agreed. That we unpacked that earlier. So one thing that you would have come across, guys, when you looked at wet lease, if you did your research sufficiently, you would have seen that marketing costs are for the account of the lessee. So we are missing marketing costs from this. Okay. And usually with wet leases as well, they've got both the fixed and the variable component, but I'm seeing only the fixed component. Okay.
Freddie. Yeah.
Sorry.
Yes, I have a question on the fuel and lending, because as we do not have a certificate for that aircraft, do we have a right to be given that this aircraft is going to land on this zone? Because obviously, if they need to give you the rights, you must produce something like a certificate that no, this is the aircraft which is going to land on this place, and we do not have a certificate because of a wet lease.
Why do you say we don't have a certificate?
Because the certificate is provided by the lessor. because this one is not, it's not a dry lease.
Oh, you're
on
saying, okay. I thought you were talking something of actual fact. You are referencing it to wet versus, and then that's why you're questioning the parking fees. I get you. Yeah.
Yes.
Quite a responsible review note there. Well done. Okay. Right. Then we get here. We get here, guys. And this is what we call the marking grid. This is what we were looking for. So we can just take a step back and say, how many of the indicators did we hit? Okay. Incorrect ending period, we did. 12, 18 months, we did. 80% load factor, we interrogated it. 1,800, we interrogated it. Critique the inclusion of meals and beverage, we did that. Market relatedness, question the market relatedness of the wet lease payments or the reasonability. I don't think we did question the reasonability of the 13.8 million. We should have. Okay. With comparison, I guess, to our research, we should have. So we missed that one. What else? Calculate revenue, relevant ratios, EBITDA as a percentage of revenue, etc., and compare with current. We should have. Calculate the fuel costs, etc. We interrogated fuel costs, or someone did. Discuss the inappropriateness of including VAT in the lease payments. We did that. Discuss the omission of other costs, like marketing costs. We did that. Pre-research rehistoric George or Tambo passenger volumes. We did that, 753,000. Discuss that wet leases are generally based on block hours and not fixed monthly amounts. If you did proper research, you would have seen this. It's not fixed monthly. We didn't do that. Discusses that the variable component of the list has not been included. We did that. Discusses 3 valid strategic considerations. We discussed competitor analysis, IRR and PV. We didn't discuss sensitivity. We should have. Oh, reliability of journey ops. We should have. Availability of lending slots, shared service costs, 5-year projections needed. I think we did that. So we got at least 3 valid considerations there. Right, guys, we missed 3. So how many indicators do we have here on the list? 2, 4, 6, 8, 10, 2, 4. Is it? Yeah. 2, 4, 6, 8, 10, 2, 4. So we've got 14 indicators. The ones that have stars are higher level indicators, are what we call higher level indicators. So it's going beyond, like going over and beyond. You know, those trainees or those colleagues that get, what do we call it? Exceed expectations. That's those. So they're the stars. So we're not going to count those. So if we say 14 minus 3, so we have 11 indicators. And out of the 11 indicators, we missed 2 because we got 2 high-level indicators, but we didn't get 1. Yeah. So we got 2 of the 3 high-level indicators, and then we got 9 out of the 11 indicators. Let me just put it in the chat box before I forget. So we get 9 out of 11 indicators, and then we got 2 out of the 3 higher level indicators. Okay. As a team of 225 candidates. Right. I guess if we're writing individually, we might not have achieved what we did. But does this, because we missed 2 and 1, does it mean we are not competent? Or does it mean we are competent? Does it mean we are borderline? Or does it mean we are highly competent? Or we are limited competent or not competent? Yes. this is a demonstration of a highly competent discussion, because I think you were close to killing all the competent indicators, and you also got 2 of the 3 high-level indicators, so highly competent. So that is how we assess, and that's how EPC it's all about. We don't mark. So from here on, I don't want to hear you guys talk about marking. We are assessing. I don't want to hear you talking about marks. We are simply achieving indicators of competence or getting credits for the indicators. So those elements. All right. Yes, I said to you guys, yes, all this material, including, let's call it the lecturer's view, because I think there's certain things that you are seeing here that is not on your current slide deck, will be shared with you guys, just to make sure that you keep it for learning. But I guess, yeah, I think we achieved our objective of just working through pre-released information, actions, what to research to make sure we are subject area experts, walking into an assessment, understanding what it takes to review a task, putting together review notes and submitting, and also marking based on the marking grid. I think that's what APC is all about, and that's what I wanted to introduce to all of you guys. And hence I say, welcome back, or welcome to our first timers in this process. It's going to be an interesting journey to really do this. And for the repeaters, welcome back as we unlearn the bad habits and take forward all the good habits that we established in the last year and the previous years. And yeah, maybe at this point, let's ask questions. We still have 3 minutes. If anyone has any question around this process. Yes, Tembikosi.
Hi, Mr. Ferdy.
Hi.
Hey, me, I'm going through a lot as an individual. Like, I loved how you unpacked all of this, right? But I'm actually thinking to myself that, like, how does one get to this as an individual? I guess that's why we're here.
That's why
But
we're here.
personally, shame, dear God, like, it's like, when would we get here? I don't know if you get me. So I am ready to be equipped, but at the same time, like there are nerves that, yo, does one ever get to this point? You know what I'm saying? So those are my concerns at this point. I loved how you unpacked. I loved how we engaged, but at the end of it all, it's like when I have to face myself, like how do I get here? You know, so yeah.
And there's only one trick, Stembinkosi, with your hard work, dedication to the program, and the passionate professional team, and all the support from mentors, everyone, you will be amazed. It's always interesting when we get to August, September, and we look at where we're coming from, which was in April, May of each year, the last 4 years that we've run this program. It's always miles apart to say, look at where we are. When we get to certification, candidates will tell you, oh my word, I never thought I would get there. But if you just dedicate yourself to the program and do exactly what we say you must do when it comes to the face note in terms of the weekly tasks that we will be giving you, attending the sessions, participating, making sure you're not distracted through the sessions, consulting when you need to be, you will definitely be there. You will be amazed. It's a journey. And one thing about APC is that sadly we learn through the mistakes. So we've got to put you into an assessment and you've got to get it wrong. And then you will learn from the mistakes. Unlike the undergrads and postgrads where they teach you first and then you write a test at the end. Here, imagine, beginning of May, we'll be writing our or middle of May, we'll be writing our first assessment, the mini case study. And before that, we'll be having tasks as well, which you need to work through before we teach you a lot. Okay, just hang in there. Okay, Mbali?
Hi, Fedi. I think I asked the question, what is the difference between key strategic consideration versus other consideration? Because I think there was a question where they asked both of them, and yeah, I was a bit confused as to what does that mean? Is there even a difference on those ones?
Yeah, well, we can be technical and say there are differences. Key strategic considerations are very, it's the bigger stuff, you know, it's the bigger stuff that call it the board needs to think about. Whereas other considerations include key strategic considerations, but could be other smaller operational stuff that management and junior management need to think about. But for the purpose of an assessment, when they're asking you for, I guess, key considerations, you will drop them, like you will type them out, because you're not going to come up with a long list. So you don't have to say, is this big enough? Like, don't spend your time thinking, is it key enough or is it strategic enough? If you think about it, write it down. You get what I'm saying? We will do this, and unless you've thought about of like 20 considerations, then yes, narrow them down to key and strategic in that process. But if you are thinking of 6, I mean, if 5 of them are key and 1 is light, just write all of them and you will be fine. Okay.
Thank you.
Thanks, Mbali. All right, guys, that is us for tonight. So from here on, what we're going to be releasing is the case study that we'll be working with from here on all the way until middle of June. And that's the Metagog case study. The Metagog case study, you'll find it on your portal. I'm not sure if it's there already, but I'll check with my team. So you don't, or there will be an announcement once it's out. Yeah, so you need to start reading document A. If you look at the face note, you need to read document A and start analyzing it and unpacking it for the purpose of the Saturday session. Okay. What you're going to do for me now is to type a few lines in the chat box and tell me what is your key takeaway from the session. And thank you guys. And yeah, see you guys on Saturday morning, 8 o'clock sharp. Cheers.